All right, good evening, everybody. What is up? It is Friday. It is May 26th, 2023. It's about 9:09 p.m. Eastern Time here. We are reporting live from Central Park South. I do want to apologize because we are very late to the stream. I'm actually just running from dinner. I had to go get some dinner with a couple clients, some friends that were in town, so that did run quite a bit over time. But I'm glad that I'm able to be here with all of you. It is also Fleet Week here in New York City. I've been noticing a lot of the service members from the Navy, I believe the Air Force and the Marines, or the Marines and the Navy, walking around. So I think it'll be cool to be able to see a lot of that action tonight. Obviously, it is Memorial Day weekend, so the markets will be closed on Monday in observance of Memorial Day. I trust all of you have some amazing plans for the weekend. Now, we're going to talk about the market today. The Dow Jones Industrial Average, the NASDAQ, and the S&P 500 all putting on substantial gains for the week. But I think the biggest takeaway for the week on Wall Street was the semiconductor indices. If you take a look at ticker symbol SOXX, which is the iShares Semiconductor ETF, it's up about 7% today alone, and about a couple points off of the all-time record high. And we've said before, in order for this market to really get in gear, it's going to need participation from the semiconductors, right? If you think about Dow theory, oh, look at these rats. Hold on. Oh, you just missed them. We'll see if they come back. So anyway, if you look at Dow theory, really what Dow theory says is that if the Dow transports are breaking above their major moving averages, that essentially means that the market is in gear, right? Because the transportations, we can use that as a leading economic indicator to show that GDP growth will continue to rise and corporate profits will continue to rise as well. But I think we may be able to substitute that with semiconductors. If you think about all of the new innovations and all of the brand new technologies that are coming out, from AI to machine learning to pretty much everything, EVs, electric vehicles, autonomous driving, it's going to need semiconductors. So if we have the semiconductor indices really in gear and ripping, well, what does that say about the market, or what is the market telling us as a leading economic indicator about the demand for all of these products that are really going to be driving the vast majority of economic growth in the country and globally? So we'll talk about that tonight. Let me go ahead and put my laptop away and we will get started. I see Solo Flyers in the chat. What's up, Tom? I love Central Park at night. I do too. It's a really beautiful place. They keep it very clean. Central Park was beautiful today. I actually took a walk around Central Park today on my lunch break. It was amazing. Let me just make sure we have subscribers only mode on tonight so we don't get too many trolls. James V is here. What's up, Charles Hong? This is Tom. Hello from DC. Where did you get dinner? So, Charles, it's a very good question, and I have a good recommendation for everybody in the chat. Let me put away my laptop, and I'll tell you guys. All right. You ever been so full you could barely walk? That's how I feel right now. But I think that's good. So what I think I want to do tonight on the live stream is see if we can get all the way to the Brooklyn Bridge, because it is a beautiful night out here in Manhattan. It's not too hot as well. I think it's only like 70 degrees out, so it's going to be a really nice night for a walkabout and a quick recap of the financial markets. But this is Central Park South. We're standing on the corner of 59th Street and 7th Avenue. if you look at this big building here with the archways, this is actually the New York Athletic Club. Should be pretty busy tonight with all the events going on in New York. But I have a recommendation. If you know where the Park Hyatt is, which I'll quickly show you guys. We always talk about it on the live stream. This building right here, let me see if I can turn my brightness up. I feel like the brightness is really low. So this building right here, this is 157 Extel Development. And then Extel also developed this building right here, which is Central Park Tower. Now, 157 is a multi-purpose building. One side is residences, and then one side is a hotel. It is called the Park Hyatt, which is like a 5-star hotel in Manhattan. But there's a really good restaurant that I think is very underrated, and not a lot of people know about it. They don't really advertise it much. But if you go inside the Park Hyatt, there's a restaurant called The Living Room. And it's really nice because it's sort of like a lounge, right? It's not a traditional, well, I guess it technically is a traditional sit-down restaurant, but I don't know how to explain it. There's more, the tables are lower to the ground and you sit on couches and things like that. It's actually really nice. I'll try to cross the street before the light changes, but it's a really good place. Really, really good place. And I think on Wednesdays during the summer, they actually have live jazz music. Here's some of the military members coming out of the New York Athletic Club. So it is Fleet Week, so we're going to be seeing a lot of our armed forces men and women. Here's another one coming out here on the Walks in Wall Street channel. I gotta get some water. Here on the Walks in Wall Street channel, we support our military service members. So thank you for your service. Hey, Austin City Limits is here. What's up? Paul says, good evening, Tom. Hope you had a productive week. I did. I had a really productive week. Very busy week, but I'll tell you what. Today, this is the JW Marriott Essex House. Another really amazing Art Deco building and hotel. It's actually a part of the Historic Hotels of America, the National Trust of Historic Preservation right here. Check out the lobby. You have an amazing grand piano right here. All beautiful marble and really fantastic crown moldings all along the top here as well. But anyway, you know, one of the things I noticed is that right around 12 o'clock today, you really couldn't get a hold of anybody. And I think it's because pretty much everybody's took off either late Thursday and early Friday so they can get the extra long weekend. Obviously, markets are closed on Monday, so everybody probably already took their trips out to the Hamptons, out east on Long Island, or upstate New York. I actually know a lot of people who went to Boston this weekend for whatever reason. Andrew O'Donovan, good to see you. I'm not too sure about that, actually. I don't know. Hey, Gary Carpenter, what's up? Says Tom, my father was stationed in Hawaii in the 60s. Very cool. Yeah, my good friend that I went to college with, he was stationed, I believe, in Guam. So what is that? Anderson Air Force Base, I believe, over there. And then he was stationed for a while in Osan, Korea, which I believe is one of the largest U.S. Air Force bases abroad, I think. He was doing a lot of work there, training the South Korean military. These two big buildings over here is the Deutsche Bank Towers. Now, if you remember from last night's live stream, we actually took a trip all the way down to Wall Street, 60 Wall Street to be exact. That was the location of the old Deutsche Bank. Now they have since migrated all the way uptown to Columbus Circle. Wall Street was kind of a ghost town last night. I mean, it's a beautiful neighborhood. I really, really like Lower Manhattan a lot, don't get me wrong, but I mean, you guys saw it for yourself. You know, we've been talking a lot about commercial real estate specifically on the streams, and it's pretty concerning. right? You're having this huge flight to quality to Class A office buildings, and everything else is pretty much becoming abandoned. So we'll see if they can repurpose and convert them either into hotels or residential space. Justin asks, how often does corporate move their headquarters in New York City? I guess it just depends. It's a corporate decision, right? It depends on if they're trying to get a better deal. It depends on if they're trying to downsize. What we've been seeing is a lot of corporations, particularly big tech companies, a lot of them right now, there's a lot of subleases on the market. I know that Facebook has a lot of space, Alphabet, because essentially with the remote work and hybrid work, they just have way too much space that they really don't need, right? So the bad news is when these leases come up and become available in the next 12 to 18 months, I think you're going to see vacancy rates even go higher than they already are. And so corporations are choosing to opt for smaller space, so less square footage, but the square footage that they do rent or they do lease is of higher quality. So they'll be in, Class A office towers with tons of amenities. The buildings are new developments built 2019 or later. I always walk past these sort of, I guess, not really antique shops, I guess you could call them, right? What would you call these things? Like the decoration stores for all the very expensive apartments. I never see anybody in here. And there's dozens of them all over the city. And I never see one person in it the entire time. It's probably potentially a front for something, perhaps. Hey, Jonathan Richards says, hello, Tom, good to see you. Julia M, welcome. Yeah, so somebody's talking about BlackRock in the chat. So BlackRock is another company. They had their big headquarters right off of Park Avenue, but they've actually just since moved to the Hudson Yards as well. And the Hudson Yards is an amazing, pretty much brand new developed area, right? Totally brand newly developed. There's this software company that one of my buddies works for called Qualtrics. They are in the Hudson Yards as well. And I'm hearing rumblings that Datadog may be looking to move out of the New York Times building, potentially. But as of right now, that seems to be all rumor. But we'll see. Star Fox, welcome. Good to see you. Keith says, I called them expensive, yeah. Nina, what's up? Hey, Tom and team, just arrived home after a long day at work. What's up? Ed Dunkel is here. Yeah, Nouveau Riche signifiers. Ed, you probably hang out in those stores, right? Buying all those little trinkets. I mean, some of this stuff is nice, right? I see a lot of cool paintings, but I don't know, maybe people order this stuff online. I walk past these things all the time and I never see anybody in it. All right, now we're on 57th Street. We're looking downtown now. You could actually see the Radio City Music Hall sign and One World Trade Center. So I'm gonna try not to get distracted tonight, and we are gonna plow all the way down to the Brooklyn Bridge. We're gonna try to walk all the way to the Brooklyn Bridge tonight. I wanted to go there last night, but the phone died right as we got to South Street Seaport. But it was really nice to take you guys lower Manhattan, just so you can sort of see and vacant commercial office space in Manhattan, right as we walk down Wall Street past Deutsche Bank, I should say the old Deutsche Bank. Pretty dead, right? Now, I think it was Sparks Carnival that says Paramount is going to be investing, I'm not sure the exact dollar amount, into revamping 60 Wall Street. I'm not sure if they're going to make it fully residential or maybe a hotel. My old office building down there, which is 82 Wall Street, it used to just be office buildings, and now it is the Wall Street Hotel, quite literally. And I think that's where things are starting to go. We talked about 30 Rockefeller Center. If you look directly above the Today Show, all of those units above the Today Show is completely vacant, completely empty. They are also going to be turned into luxury hotels. I forget what is the development company. I think it's like Aspen Development. Big developer, luxury developer out of Colorado. This is the skinniest luxury residential apartment in the United States we're looking at right now. 111 West 57th Street, or the Steinway building. Really beautiful and really unique design. Hey, Keith is here. Says, Tom, did you buy that nice briefcase you saw on the window the other night? I didn't buy that one, but I did get a new one. You know, I've had the same briefcase from my first job that I've ever gotten. So my first day on the job, my boss, you know, the company puts, you know, all the, you know, your laptop and all this stuff on your desk. I've used that same briefcase and I've worn through the metal straps, so the thing is totally beaten up. So I did get a new one, but not the one we were looking at. You know, let's head over to Fifth Avenue. I think there's going to be a lot less street traffic. This is 432 Park Avenue we're looking at right now. Now, the big black building to the right is the Trump Tower, which is technically a multi-purpose, multi-use building as well. You have the Gucci store in the basement, or I should say the lobby, excuse me, of the building. You also have you have a really nice international business center there, which I've been to before for a meeting. And then you have the Douglas Elliman offices right behind it. Hey, Lemonade, what's up? Good to see you. Says, wow, we're live. Hello, Tom and team. Lemonade, good to see you as always. I forget the artist's name here, but this is very, very popular. Hey, Ken, what's up? Says, yo, Tom, nice to be back and watch someone else doing all the walking. New York City is looking great tonight. Ken, what's up? Ken is our Canadian friend. You know, I think I told you guys last night when we were doing the live stream, you know it's summer in New York when you see all of the Canadian tour buses lined up outside the Museum of Natural History. So all of the you know, Canadian tourists are coming back, which is kind of nice to see, because I remember in 2020, even in 2021, very, very little tourist activity. And you could really see a difference, especially during the day. I would say tourist activity is probably, you know, maybe 80% back to what it used to be. Today was really busy in the city with a lot of tourists, which is really good to see. So we're gonna head over to Fifth Avenue. Here you can see the Tiffany building. This is actually probably a better shot of it. So LVMH did take over Tiffany. They've acquired, obviously, the main flagship store of Tiffany, and they've completely gut renovated it. And I believe the top 2 floors is the restaurant, the top of Tiffany's, which is really nice. Hey, Ryan, what's up? Says, hey, Tom, how's New York City doing? New York is doing good. You know, my only critique, you guys want to know what it is? It needs to be hotter. It's only like, it's been like 55, anywhere from 55 to 70 degrees. I think we need it up in the 80s. It's going to be June, quite literally next week. So it definitely needs to, temperature definitely needs to get up there. This is another luxury hotel we always talk about, Aman, New York. This building has totally been renovated. This is sort of like an outdoor sky deck and lounge. Really, really beautiful in here. Again, I think per night, the starting rate for a basic room with the king bed is anywhere from $1,500 to $2,000 a night. Kind of crazy to think about. However, I believe there's about 10 of these hotels across the world. They're like, it's a very luxurious Japanese brand, and they have specific hotels in, you know, very sought after vacation locations. Haven't been in there, but maybe one day I'll have an excuse to go in there. We'll see. But I think we'll just kick things off, everybody. I really want to put our focus towards this broader-based rally we've had in the semiconductor sector. And I think it's very important for traders and investors to acknowledge that and understand it, because there's been a lot of talk, especially on Twitter, on FinTwit, financial Twitter, that the percentage of tech stocks that are extremely extended above their 50-day moving average is at the highest level it's ever been since 2004. So many people are using this as a bearish signal and saying that the market is showing irrational exuberance and the market is getting a little bit frothy. However, since this week, the main topic and the main theme for this week is being a contrarian, I think it's appropriate to look back throughout history, specifically during the start of brand new bull markets. Now, I'm not saying this is a start of a new bull market. I think it is, but could be wrong. But if you do some analysis and you go back throughout history and study how stocks act at the very, very beginning of bull markets, it's actually normal and appropriate for stocks, individual stocks, to become extremely, extremely extended above their major moving averages at first. And we'll sort of explain why that is as we pass the main entrance, the front doors of Tiffany & Co. Now, markets, they run in cycles, and there's a really good book that was written about this by one of the greatest hedge fund managers that ever lived. His name is Ray Dalio. And Ray Dalio is the founder of Bridgewater Associates, based out of Connecticut. And you could read the book. It's called Principles by Ray Dalio. You could sort of get a better understanding of exactly what we're talking about there. But we are coming off a little over a year now, especially where these high beta, very high flyer, frothy style growth stocks have been really getting hammered, right? And one of the indices that we could use as a proxy for risk appetite in these particular names are the ARK Innovative ETF, ticker symbol ARKK. I think I'll take you guys this way, just so you can see 432 Park Avenue. This is the this is the entrance, by the way, of the Trump Tower, 721 Fifth Avenue. This is the residences. So this is the residential side. So if you own an apartment or you rent an apartment here, this is where you go in. But a lot of these stocks have been crushed, have been really depressed. So what that does is usually out of an emergence, I should say, coming from a bear market to a bull market, stocks trade sideways. They could trade sideways for months. They could trade sideways for a year. Prime example, take a look at the S&P 500 right now. Go to a weekly time frame. The S&P 500 was trading at the same level pretty much, give or take 100 points, where it was last year. So we've had really no material progress in the market. So moving averages tend to go sideways and compress. So when you get your initial rally from the emergence of a bear, these stocks take off and get extremely, extremely extended from their major moving averages. Exactly what we're seeing right now, by the way, especially in a lot of semiconductor stocks and in some of the very beaten down tech names that I've been actually very critical of over the past year, such as Palantir, Atlassian, a lot of these software as a service enterprise software stocks. Here's First Republic. And so I think it's important to understand that. So it's not necessarily important to focus that, this could be irrational exuberance, this could be really frothy behavior, that the vast majority of tech stocks are trading at an extremely elevated level above their 50-day. If you look back at the start of any bull market, that is usually what happens. What is critical to watch, and I posted this on my Twitter page, by the way. If you want to take a look at it, you could follow @Walks Wall Street. What's more important is the reaction when these stocks ultimately correct back down to their major moving averages, right? Back down to the 50, back down to the 200. If these are coming back down to the 50-day moving average at 6 o'clock, right, on really, really high and heavy volume, well, that's not a good sign. However, if you see volume drying up materially, right, if you see these stocks kind of drifting back to the 50, maybe trading in a very, very tight trading range, allowing those moving averages to catch up on very low volume, then that's good news. And if these stocks, when they do correct back to the 50, they find support and institutions are really getting in there and hammering that bid hard and pouring into these names, this could very well be the start of a brand new bull market. So the sentiment that I'm seeing right now, not only on Wall Street but on Main Street, is that the market's going to make another low. This is a bear market rally, and they may be right. However, it's always appropriate to understand both possibilities and trade with the trend of the market. So this is 432 Park Avenue. This is one of the most sought after buildings on New York City's Billionaires Row. It is such a unique style building. I think it has a saltwater pool right here. So this little block of space right here, I believe that's the pool area and the gym area. And look at how high this thing goes. Really kind of unbelievable looking at it as you're across the street from it. Hey, Hawaii's here. What's up? Says Ola Tom. Happy Friday, or aloha. Good to see you. Golden City says, hey Tom, welcome, welcome. Music Productions, good to see you. TK Porsche says it's possible for one stock sector to be hot in the midst of an overall bear market. With the Fed working overtime on hiking rates, stocks have not fully discounted a recession. Yeah, potentially, and I think you make a really good point. You make a really, really good point. The only thing right now that is keeping me from putting on full position sizes is the lack thereof of participation from the broader, I would say, the general market, so all sectors in the market. So that's what we call breadth, right? The breadth of the market is actually very, very slim right now. So you make a fantastic point. So this could potentially just be a scenario here where we have this AI, sort of mini bubble within a bear market. That is possible. I have increased my exposure, but the only thing that is really preventing me from putting on full positions here is exactly that. If you go sector by sector, line item by line item through this market, if you look at, consumer staples, if you look at consumer discretionary, if you look at enterprise software, if you look at SaaS, if you look at energy, if you look at oil and gas, just go down the list of all of these sectors. It's so important to do that. There's really only a couple stocks participating in the market, right? So you make a great point. You make a fantastic point. So it's a really, really atrocious lack of market breadth that we have. I always say use this free resource if you go to slickcharts.com. Once again, that is slickcharts.com. And if you just click on any of the major equity indices, it'll give you a full breakdown of the S&P 500 by weighting and a full breakdown of the NASDAQ by weight. I think, that's Robert Herjavec, one of the sharks. Last year, Robert actually closed on a really nice apartment in 157. So he actually has a really nice space there. I think he's on the 36th floor, I believe. He has a really, really nice apartment overlooking Central Park. So we pass by his place all the time. Yeah, but you're 100% right. So if you look at slickcharts.com, as we're passing by the Ferrari showroom here, the S&P 500 and the NASDAQ are both market capitalization weighted indices. So what this means is the higher the market cap a stock has, the bigger percentage it makes up in the indices. So for example, Apple, I believe, makes up about 7% of the S&P 500, which is crazy, which is really, really crazy, right? So think about Apple, think about Meta, think about NVIDIA, right? NVIDIA is almost $1 trillion company, which is kind of crazy to think about. Think about Alphabet, Amazon. I believe the top 10 stocks in the S&P 500 right now make up about, I believe, over 30% of the entire index. So think about that, like 502, 503 stocks in the S&P, and you have 10 of those stocks making up 30% of the entire index. This means, let's say if Apple is down 4% on the day, there's a pretty high chance that that is going to bring down the broader index in and of itself because it has such a high weighting, right? So everybody is saying it's the S&P 10, it's the S&P 5 instead of the S&P 500, because if you look at what stocks are really making up the lion's share of this market rally that we're having, it's a lot of these mega cap tech stocks. You know, I'm not a big car guy, but these look really nice. Anybody have a guess about how much these would cost? Let's see if it says it on here. I don't think so. But these look really nice. This is like probably the best marketing tactic I've ever seen in my entire life. Think about that, guys. Why do you think Ferrari would put their showroom smack dab right on Park Avenue? Just so happens, look at what a coincidence this is. You see this building over here? You see that building? That is 425 Park. This is one of the brand new Class A office buildings right here in Manhattan. And we've been talking about there's going to be a huge exodus from Class B and Class C commercial real estate and a big flight to quality, these buildings right here. Now, Citadel Securities is one of the most, probably the most successful hedge fund, quantitative shop, market maker on Wall Street. They are actually located in this building temporarily until Ken Griffin decides on his plans to build a mega tall structure right here on Park Avenue, adjacent Jamie Dimon's building, which is 270 Park Avenue. So I think Ken Griffin's office is one of these corner units, and he has a really nice view of the Ferrari showroom. So pretty good marketing by Ferrari to literally be right in the face of all your clientele and all your customers. Right, we talked about this last night. We were downtown on Wall Street. Many people think, and many people that are non-New Yorkers or maybe not familiar with the financial world, they still think the vast majority of trading activity and just financial activity in general happens in Lower Manhattan down on Wall Street. It's actually not true. The New York Stock Exchange is pretty much just like a historical site now. I mean, some trading activity and some market making does happen there. But the vast majority of hedge funds, family offices, investment banks, private equity firms are all located right here. We are walking the main strip right now. We're about to pass by the Seagram building, which the Seagram building is actually one of my favorite buildings in New York. I believe Center Bridge is in there. Also, right over here is going to be, when it's completed, JP Morgan Chase. I believe Chase has shed about, I forget the exact number. I think it's over 1 million square feet of office space, and they are going to consolidate the vast majority of their employees right here. So they had some employees in Queens, they had some employees over in New Jersey. I think they're going to close down those two offices and put everybody here. Hey, J95 says, Tom, I work on 54th Street on your left. Oh, right there, City National Bank, very cool. You know, we probably passed by each other a couple times because I actually used to work right here at 430 Park. I really like Park Avenue. It's a really nice place. You have a really nice office, by the way. You're in a prime location, and depending on where you're commuting from, you have Grand Central Terminal right there, which is awesome. Hey, we have Evan Weeks. What's up? Happy Memorial Day weekend, or the start thereof. Good to see you. Welcome, welcome. Now, the Seagram building, I believe the owner right now is in the middle of trying to refinance the debt on the building. Look at that. This is my favorite building in New York right here. Hey, Joe says, hey, Tom, happy Memorial Day weekend. Thank you, Joe Hernandez. Appreciate it, sir. I'm wishing the same for you as well. Let me catch up on some of the chats. Taxicab says, how can you stand using the official Twitter app, Tom? It sucks. I was using Twitterific for years. I'm not sure what Twitterific is, but yeah, I use Twitter every day and it works fine for me. Beto says, Tesla Cybertruck. I definitely get one. Hey, Evan Weeks says, hey, Tom, remember when we used to talk about residential real estate prices and what we were seeing in the market? I can confidently say prices are coming down in New Jersey. Well, that's really good news. Now, I know you've been saying that you wanted to pick up a place over there, pick up a property in New Jersey, so hopefully as prices come down, you'll be able to do that. Now, I believe the average 30-year fixed rate mortgage as of today's close is 7.10%. So we're back at a 7 handle on a 30-year fixed, which should really stifle some of the demand. Now here in Manhattan, really the problem that we're running into here in terms of residential real estate is there's still a lack of inventory in Manhattan, of good inventory, right? There's a real big lack of high quality inventory in Manhattan. I think a lot of people are still reluctant to part ways with their homes or with their apartments or with their co-ops, specifically if they've purchased within the last 2 or 3 years, because they have, you know, in most cases, sub 4% interest rates. So even if they were to make a couple bucks on the deal, they would just have to go right back out into the market. And even if they wanted to trade up, their monthly payment's probably going to be double, if not triple, of what it is now. But I think the national average in terms of home prices are coming down, which they should. You know, real estate is pretty much a rates game. I don't know, anybody else seeing the same thing in their markets? Anybody seeing prices finally starting to come down? I'll give you one more shot of 432 Park Avenue here. Hey, Hawaii, thank you so much. This is happy birthday month, Tom, and I hope you enjoy the 3-day weekend. Thank you, Hawaii. Appreciate it very, very much. I did have a fantastic birthday. My birthday always falls around Memorial Day weekend, which I love. Memorial Day weekend is officially the start to summer for me, so I appreciate it. Thank you for the birthday wishes. Hang with Mark Mom says I'm never going to unload my 2.3% home in Florida. Yeah, I think, you know, in the Miami market, I think you'll probably see prices come down more so in the overheated markets like Fort Lauderdale, you know, maybe parts of Miami and like the condominiums, maybe not the single family homes too much, but that usually happens in every cycle though, right? It's the markets that have really, really big turbocharged growth tend to correct the most. However, I don't think Florida is going to correct as much as some parts of Texas. I think cities like Austin, Texas, the prices there have been totally unsustainable. I think that's going to come down in a big way, which it already is happening. But look, I think that's a good thing for the health of the housing market long term, right? I think overall that's a good thing. Also, I believe many people have been conditioned to think about purchasing real estate and valuation in the inappropriate way, in my mind, over the last 12 years, right? Because over the last 12 years, we've been having these really crazy artificially suppressed rates. This is KPMG, another big consulting firm, which is now not here anymore. It is at the Hudson Yards, talking about the consolidation from these older style office buildings to Class A. KPMG has their main headquarters in New York City in the Hudson Yards. But anyway, going back to my point, and I think you guys may agree with me on this. A lot of times you'll hear like real estate agents and just people in general talk about affordability and buying a property of what you can afford by the monthly payment. That is, in my opinion, right? In my opinion, we could differ, the exact opposite of what you should actually look for, right? The monthly payment is, in theory, totally irrelevant, right? You want to focus on valuation alone, right? You only want to focus on valuation if you're in the business of making money, right? You only want to focus on valuation. So there was many people, over the last pretty much 2 years that were saying, oh, I could afford this house because my monthly payment, this is Blackstone, by the way, Steven Schwartzman, because my monthly payment is going to be, let's say, $2,000 a month, right? And they're just only focused on looking at the monthly payment. However, somebody right now, let's say if the valuation of that property at the time where rates were 3%, just for argument's sake, was $450,000, right? Your monthly payment's $2,000 a month. Now, with rates at 7%, that property could very well be trading at $400,000, but the monthly payment, assuming you only put, let's say, 20% down, could be almost double that. People would say, oh, it's more expensive now, but it's not. You need to look at the valuation. So I think investors who could afford to put down a significant amount of cash in this environment and pay all cash, they're going to make a fortune at the turn of the next cycle when rates start to come down, right? So I know it's kind of, many people may not want to think about it that way, but that's how you should think about it. You should think about what is the price tag I'm paying on this home? Because all of the money in real estate is made at the buy, right? So you want to buy right, and you want to think and ask yourself, what can I do to this property to improve its value, right? Maybe you want to look at a wedge deal, look at an off-market deal where it may need a little bit of work. It's trading at, maybe $50 a square foot less than all the other properties on the market, but if you put a little bit of work into that, maybe if you purchase it at $300 a square foot, if you put a little bit of work into it, then you could flip it for, $410, right? So always, always, always focus on the valuation. Don't so much focus on, if I put down 2% on this property, what's my monthly payment going to be? That's not the way to look at it. Hey, Blues Writer, what's up? This is happy Memorial Day, Tom, hoping the Heat make it to the NBA Finals. Hey, Blues Writer, so what is the story with that? I'm not a big basketball guy, but all of my friends down in Miami have been talking about it. So the Heat are playing who? The Celtics? The Boston Celtics? So how many games do they have to win to advance in the series? Hey, Hang with Mark Mom says, yep, Tom, I never listen to what the lender tells me. How high I can afford, I buy just as. Homes fully rent before flipping them. Yeah, it's, you have to understand it's the principle of follow the money, right? If you solely focus on that principle when you're investing, follow the money, it'll lead you right to everybody's motives. The lender wants you to take on as much debt as possible because the more debt you take on, the more interest they are going to collect from you over the long-term life of the loan, right? Now, many people who just want to buy one house just to raise their family in and, have kids and, they don't those people tend not to look at the valuation of the home. It's just, okay, what can I afford as the monthly payment? I would really, really implore everybody to start to focus more on the valuation and not, oh, rates are here, so it's unaffordable, right? Because affordability, and I'm always using air quotes when I say this, it's kind of an illusion, right? It's kind of subjective. You should think about it like buying a stock, right? If a stock is trading at, 50 times earnings, 60 times earnings, well, how many years is it going to take for you to make your money back or break even on that investment, right? But for some reason with real estate, people are just going to say, oh, well, if I could afford to pay $2,000 a month, I'm going to pay $2,000 a month in rent anyway, so I might as well buy. Well, what happens when rates change substantially and all of your equity gets wiped out, right? So it's important to focus on that. It's very important. Hey, Victor G. Oh, okay, so it says Miami needs to win one more game. I see them winning one at home. Got it. I think they were up, like 3-0 in the series? Something like that? 3-0 in the series? Nina says, agree, Tom. You're definitely intelligent advice. Thank you. Hey, George Munoz, what's up? This is Tom. When I bought my condo cash for $470,000, I just saw that I had bought with no down. It would actually be $1,100,000. What do you mean by that? Maybe I'm reading it wrong. I apologize for that. Blues Riders says Heat leads the series 3-2. One more win and then they're in the NBA Finals. That would be cool, because maybe if I'm in Miami for the finals, man, that would be crazy to get on the live stream. Hey, Laureen Peters says the city looks great tonight. Miss it so much. Please come back. Please join us back in New York. All right, we've made it to the brand new JP Morgan Chase office tower. Not this one. This is our friend here. We always pass him. This is a cause statue or monument, piece of art. Michael Joseph says Celtics trying to force Game 7. Yeah, I'm not a big basketball fan, but I guess I would root for the Miami Heat since I reside in Miami. I think that's appropriate. Username Schmoozername says car dealers focus on monthly payments and not the price of the car. In my opinion, you should always focus on the valuation. Always. Always, always. Hey, Hang with Mark Mom says, yes, that happened in 2005 when I bought a home at $240K. And after the recession hit full blown, that home dove down to $149K. It took almost 20 years for the value to climb back. Then I sold it. Yeah, I mean, over the long term, right, if you extend your time horizon long enough, real estate tends to go up in the United States. Wow, look at this. So here we have it. This is the construction site of 270 Park. This is Jamie Dimon's new office tower. You can see they're already putting the glass on it. You can see right up there, it says 270 Park Avenue, JP Morgan Chase. It's going to be on the corner of East 48th Street and Park Avenue. Now, this is all going to be brand new as well. If you notice, they're sort of redesigning Park Avenue to where it's sort of narrows in here. This didn't used to be like this. There used to be a big medium in the middle of the road here with all flowers and stuff, but they're changing the design to accommodate the patio, or I should say the outdoor space at 270 Park Avenue, brand new JP Morgan Chase Tower. So all the traffic is going to kind of be redirected around this, which is going to make the neighborhood a little bit more walkable, which I think is actually the right thing to do. I think the city is making a really good decision for that, and making a really good decision about making this space more pedestrian friendly. And then this is One Vanderbilt, you can see. Really nice. Hey, Krog Dog, what's up? Yeah, this is completely different. This goes all the way down to Grand Central Station, the Hemsley building. Then you got the MetLife in the back. I'm really excited to see what this is going to look like fully finished too. Hey, Penelope's here. What's up? Say hey, Tom and everybody. Welcome. All right, one more panoramic shot, and then we will continue to head down. Joseph Hardaway says, for sure, pedestrian friendly is always the goal. I agree. So we've been talking about real estate, and we're starting to see prices come down. We've had a couple of chatters or a couple of viewers in the chat say, look, you know, during my home search, apartment search, whatever, prices are finally starting to come down in my market, which is good, and that's to be expected, right? If you have interest rates elevated for so long, you sort of have the way the housing cycle works, and we've been covering this, is at first you get rates go up, and then you have a period of time where you have rates are elevated, but also valuations are elevated. And that creates all of the news that we've been seeing that, oh my gosh, this is an affordability crisis, because the same house I was looking at last year for $450,000 at 3%, that would have gave me, you know, a $2,000 monthly payment. Now that home is the same price, maybe if not a little bit more, but the monthly payment's $3,500. So this is a total affordability crisis. And everybody's like, whoa, what do you mean? I thought housing prices were supposed to come down. Well, that's the first stage, right? And one of the many leading economic indicators we could look at to forecast the price adjustments is the National Association of Realtors existing home sales, right? And that's why when we cover it on the live stream, it's so important that we go in the data every month and update our Excel spreadsheet where we could actually plot the transactions in real time. And one of the things we've been seeing over the course of 12 months is transaction volume drying up. Does that make sense? Because if rates are elevated, let's say now 7%, 7.5% depending on your credit quality, there's going to be a lot less people that can afford to do those deals at those high valuations. So you're going to get some deals, but the deals are going to still trade a little bit at that level, but the amount of those deals is going to contract. Then it's going to come to a point when there's no more buyers that are going to be able to afford that. And then you have a stalemate between the sellers and the buyers. And then it just depends on who's going to blink first. And always, 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 it's the seller. Because if your home is sitting on the market for 30 days, then 60 days, then 90 days, that's not a good look. Your realtor is going to say, look, if you want to move, if you want to get this property sold, if you want to get this deal done, you're going to need to come down 5%. You're going to need to come down 10%. And once the first sale is done in the neighborhood at a lower valuation, that brings down all of the other valuations, right? If you've ever done like a comparative market analysis, right? You've done the comps in the neighborhood, that's when the prices start to decline. Now, I don't think it's going to be a 2008 style where you have 40% price declines. I don't think so, but I think it would be healthy if you have maybe a national average, which is quite significant, going down to the tune of 15%, and then in some isolated markets you may get a little bit more. I think that would be very good and present a lot of opportunity for buyers. Because what we want to do for the health of the economy, right, again, we've said this many times, in the US, the number one way that first generation millionaires in America become millionaires, acquire their first $1 million worth of net worth, the vast majority have done it through purchasing real estate. And another metric that we could look at in the National Association of Realtors existing home sales is the percentage of homes that are sold to first-time buyers. And we are at some of the lowest levels in American history at the percentage of homes sold to first-time home buyers. And that's a big problem. That is a big problem because we want the health of the American middle class to be robust, right? That's the whole part of the reason why so many immigrants want to come here, is because we are the one country that offers the easiest way for class mobility. You can come here with nothing, literally $10 in your pocket, and if you work hard, you can move up the ladder from lower class to middle class to upper class. But what we've been seeing over the last 14 years with quantitative easing is it's made that class mobility a little bit more difficult. So I think that rates are normalizing now. Rates are going back up. It's rewarding savers. There's going to be a new business cycle that will emerge, and I think this is actually going to be very positive for the health of the U.S. economy. Hey, Beacon, New York says, I was stupid not to buy cheap real estate years ago, especially in upstate New York. Well, there's always time. Now, I don't really like to make specific predictions, but I will say this, and this is going to sound like a bold prediction, but I think the people who are purchasing commercial office space in San Francisco today and in New York, a lot of this stuff is trading for less than land value, by the way. The fortunes that those people are going to make 10, 20 years from now, looking back, it's going to be just like a disgusting amount of money. I'm working with some foreign investors. I'll take you guys into Grand Central, might as well. I'm working with some foreign investors that are actually really interested in starting to look and analyze a lot of these properties, right? Because essentially what they're going to try to do is say, how much money do I need to put into this deal to either do a condo conversion, to do a hotel conversion, or maybe just tear the whole thing down and maybe sell the lot? If the numbers work, which you really got to find the right property to do it, it's going to be, I mean, you're going to look back on 20 years and be like, how the hell didn't I buy, an office space in downtown San Francisco? That's my prediction. Hey, Craig, what's up? Craig says, seems like it's all about the price per square foot to come up with current market value. Any improvements don't bring extra resale, just may sell quicker than the house next door. Yeah, maybe. I think, if you can identify a property in a specific market environment, like I'll give you an example. 2021, early 22, especially in neighborhoods like Miami, Fort Lauderdale, a lot of people that were coming from Boston, that were coming from New York, that were coming from California, right, migrating to Florida, there was high demand for turnkey property. Here's some of the chandeliers in Grand Central, really, really nice. There was high demand in Florida for turnkey property, right? Everything is remodeled, everything is totally done. A lot of these people during COVID did not want to have to do anything. They just wanted to move into a move-in ready home. So what you had is a lot of the older homes in Florida, particularly like in North Miami Beach, that needed a little bit of work, right? You needed to redo the kitchen. The kitchen was from the 70s. You know, they had the old travertine tiles. Like, it kind of looked a little bit gross. There was a huge mispricing there, and I mean in a really, really big way, like a big mispricing. So the opportunity to go in there, right, do a complete rip and replace, you know, just put in the basic Home Depot cabinets and basic Home Depot appliances. You can get an appliance package for like $3,000. I mean, the return on investment there, that trade was huge. Now, I'm not sure that trade exists anymore, but in every market environment, what I try to do is say this. You know, I don't want to buy a piece of real estate to say, okay, how much can this go up and how much could I sell it for? Because I'm assuming the price is going to go up this much over time. It's what can I do to this property to add value to it, to automatically have that equity build, assuming I do these necessary renovations or whatnot, right? So I think you make a good point, right? But I think there's always opportunity no matter what market environment you're in. I really do believe that. Because people's motives change. People's wants and needs change. And there's always going to be somebody to fill that void, to provide a good service or a good product for those demands. All right, so now we are in Grand Central Station. This is the main information booth. This is the Metropolitan Transit Authority, the MTA. You can take the Metro North out of here as well as the Long Island Railroad. Finally, for all those Long Islanders, we can now officially take the train to Long Island. It's absolutely beautiful in here. Hey, Dusty Cole says, good evening, Tom and everybody. What's up, Dusty? Always a pleasure to see you. Michael Joseph says rentals are cheap in the Hamptons this summer, slowing demand while everybody's traveling. You know, I heard that from a couple people. Why do you think that is, Michael Joseph? Why do you think the demand for rentals in the Hamptons this summer of all summers is actually down?
Attention customers, help us improve your commute. Take our twice yearly customer satisfaction survey and you can win a $50 Omni card. The survey closes Sunday, May 28th.
Sutter says, ain't that the truth? I'm in West Broward. Let me read that. Oh, out by the Panthers Arena, you literally can't find anything, even houses that are still in the 70s, for less than $475. Yeah, it's really crazy. So I'm in North Miami Beach, and it's very similar. I'll tell you, it's very, very similar. It's almost kind of stunning to see what these properties are trading at, because if you went to a place like the neighborhood you're talking about and you imagine all of those old original Florida homes, right, concrete block, 3-bedroom, 2-bathroom, pre-COVID, 2018, 2019, those houses are trading at $275. They're trading at $250,000. They're trading at $300,000. After COVID, you know, those are trading at $410,000, $450,000. If everything is totally gut renovated and brand new inside, I've been seeing some, you know, 3-bedroom, 2-bathroom, 1,200 square feet, go for $525,000 to $550,000 if it's on, you know, a dead-end street or something like that, which is really crazy to think about because those neighborhoods did not used to trade there. Did not used to trade there at all but 5 years ago. All right, let's exit to the right. Somebody says, generally speaking, you want to buy in a location where population growth is healthy. Yeah, that's true. Wabi says price is not really coming down. Let's exit this way. I think maybe there was a Yankee game going on tonight. Everybody's wearing Yankee jerseys. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. Hey, Sally's here. What's up, Sally? Good to see you. Joe D. We'll exit by the LIRR. Yeah, Canarbar's homes are skyrocketing all over the world. Yeah, I think things are cooling. The only thing that I see cooling a little bit in Manhattan specifically are like one-bedroom apartments. For whatever reason that is. You know, instead of trading at $5,000 for a one-bedroom in Manhattan, maybe you could get it for $4,500, or some studios on the Upper West Side you could probably get for like $2,300. Now, the interesting thing about the Upper West Side is that the vast majority of those apartments are in those brownstone style buildings, which, you know, a studio apartment there is going to be a little bit larger in terms of square footage than some of these new buildings that they're building. So you really got to pay attention to that, because you can go to Long Island City and get a really, really small one-bedroom apartment, or you can go to the Upper West Side and get a studio that's actually bigger in terms of square footage. So keep that in mind. Maybe you just want to pay a little bit less, get a studio apartment, and just make your own makeshift one-bedroom. And just don't tell the landlord. All right, here we are outside Vanderbilt Ave. Hey, we have some of the Navy guys and girls. Love that. Big thumbs up in the chat for our sailors here. Looking sharp. Thank you for your service. And we have the Chrysler Building. Hey, Billy Johnson, good to see you. Thank you for joining us. Appreciate it. Yeah, it is Fleet Week, that is true. All right, let's go back to Madison. Let's head downtown. You can see the Salesforce Tower in the distance. Salesforce stock is, I think, up 50% year to date. It's been performing really well as this sort of enterprise software comes back into favor after 2 years of getting hammered, getting crushed. I wonder where all of the military members sleep. Maybe they sleep on the ships? No, I'm assuming they probably have hotels here, right? I guess they don't need it. I mean, they come in on the ships. The front page of the Wall Street Journal today was the sailors coming in across the Statue of Liberty. It actually looked really cool. That was a good photo if you guys saw that. We'll go up towards the New York Public Library, and then we'll make a left. This is One Vanderbilt. Yeah, Wabi says Four Seasons. Maybe the military has the government contract with Four Seasons Hotel. Who knows? So I wanted to mention really quick stock buybacks. And here's the reason why I wanted to mention that. Does anybody remember before New Year's, right around the holidays, Christmas, Thanksgiving time, so November to December, we were talking about a new piece of legislation that is going to fundamentally, or at the time they thought, was going to change up the share repurchase, or I should say the sentiment in terms of share repurchase programs. So to review that new piece of legislation, anytime a company wants to launch a share repurchase program, which is essentially a company taking cash that they have on the balance sheet and buying their own stock, right? After January 1 of 2023, all stock buybacks will be subject to a 1% excise tax. And there was many analysts on Wall Street, and we covered this in detail. There's actually a lot of people crossing the street. We'll go around this guy who's blocking the crosswalk. There was many analysts on Wall Street that was saying, look, this new 1% tax on share repurchase programs is going to limit and deter companies from purchasing, or I should say repurchasing their own stock. Well, that never happened, and that really never materialized at all. There was a Wall Street Journal article that came out yesterday that shows Russell 3000 companies plan to buy back more than $600 billion worth of shares this year. And if you think about the companies who are making up the lion's share of those share repurchase programs, it is Apple, it is Alphabet, Meta, and Microsoft. And out of all of those big FANG names, Apple alone so far this year has repurchased $19.1 billion worth of stock. We are on track for more stock buyback programs this year in 2023 than we had in 2022, and 2022 was a record. So this proves that the brand new 1% excise tax that everybody was freaking out about doesn't seem to really be deterring these corporations from repurchasing their own shares, repurchasing their stock. Anyone have any thoughts on that? And it's important to look at this because one of the biggest valuation metrics that a lot of analysts on Wall Street use is earnings per share. This is the New York Public Library we're looking at right now. And earnings per share, or EPS, essentially improves when a company purchases their own stock. Because when a company purchases their own stock, we'll go around the garbage guy for a moment, it reduces the float, or the shares outstanding, of the company, thus increasing the earnings per share of that particular company. Thus, stock valuations go up. It's no wonder why Apple is trading near an all-time record high. Hey, Justin Hernandez, what's up? Good to see you. Let's see if Bryant Park is open. I think it may be open. I think we just may make it. We'll wait for the light. Directly ahead of us is Times Square. The building to your right is Bank of America Tower. Hey, Andy is joining us from South Korea. Good to see you, Andy. Thanks for joining us. Natalie, welcome. Says, good evening, Tom and team. Top Gun 2 outdoor movie night on the Intrepid deck. Wow, really? We may have to go check that out. That's tonight? They're playing Top Gun 2 on the top of the Intrepid? That's awesome. There's one Vanderbilt. Hey, Gregory says, looks very crisp on my new 32-inch UHD display. Gregory, good to see you, sir. Hopefully everything is going well with you at work. We're going to venture inside Bryant Park. I'm surprised it's open this late. Hey, Hal T16, what's up? Hey, Irish Mac. Says there's always an ebb and flow with outstanding shares. Companies are just paying
the hand they're dealt. KK's new sub here from last night, New York. Looks amazing, love the channel. Thank you for being here. I'm glad you're enjoying it. We're now at Bryant Park. This is the Bryant Park Grill, by the way. Really nice restaurant. But look at this. It's almost open. I think this is actually going to open after Monday, after Memorial Day. This is the Bryant Park lawn. You may have remembered this from our live streams during the winter. This is where the big ice skating rink would be, right here at Bryant Park. To your left, you have the Bank of China right here. China is actually, there was a good article in the Wall Street Journal today about China as it relates to lithium. The Chinese government is making massive investments into select countries with ample amounts of lithium. I think they've been purchasing huge equity stakes in lithium mines in Nigeria, in Chile, and the like. Now, if you think about a company like Tesla, I believe Tesla gets the vast majority of its lithium from Australia, I think. Now, it's good news for us because I think the US and Australia have the majority of the world's lithium, but there's also some African nations that have huge deposits of lithium, and it's quite obvious as to why China would want to acquire large stakes in those lithium mines. Man, this looks like a golf course, not a blade of grass out of alignment. This looks really good. Yeah, that's also true. Canada has huge lithium mines as well. Yeah, it's funny. And this is another reason, I didn't really want to talk about Mexico tonight. I wanted to save that for next week. But, I've been really bullish on Mexican equities for multiple reasons. The number one reason is because I think that Mexico, the Mexican economy, is going to benefit greatly from all of this reshoring of manufacturing capacity that is coming back to North America. You think about all of the semiconductor companies, right? Making massive investments to bring back semiconductor manufacturing and development and design to North America. I think that is really going to benefit Mexico, benefit Canada, and benefit the United States. Also, when's the last time you turned on the TV, CNBC, Bloomberg, and you heard an analyst talking about Mexican equities? Now, I won't go into the specific companies I'm looking at. I can't recommend individual stocks. But look at the ETF, the Mexican ETF EWW. This thing is trading near all-time record high, trading at a 52-week high. It's outperformed the S&P 500. And I think it has huge secular tailwinds due to this reshoring of manufacturing capacity back to the United States. So there's a main terminology that's used in the hedge fund business, and it's called crowdedness. We always talk about this term. And crowdedness is generally something you want to avoid. I think they're building the stage, the outdoor Bank of America stage. So right here is where they have all musical performances as well as movies. It's really beautiful. And then they open up the lawn here at Bryant Park for everybody to come and watch a movie, maybe watch a jazz performance while you have amazing views of the city. It's really nice. But yeah, I mean, I think Mexico is one of those trades where not a lot of people on Wall Street are talking about it. I think a lot of stocks are trading at extreme discounts relative to, American counterparts of similar companies. So I think that's something to watch. But long term, I am very bullish U.S., Canada, and Mexico. And I think I think COVID is a result of that bullishness. Because I think the trifecta, or the three amigos, US, Canada, and Mexico, are really realizing that they need to take China a little bit more seriously and diversify their supply chains away from Asia. And I think that's happening. It's going to take a long time, but better late than never. This is the main entrance to Salesforce Tower here. Wabi says Mexico City is boosting most of the digi-nomads. Oh yeah, I heard about that. I saw something on. Hey ATC, what's up? Good to see you. Smarty Pants says, Tom, you keep going to the same locations. Maybe next time go to the Oculus at Hudson Yards. We were at the Oculus last night. Hey, Joel PM says cheap Mexican labor. Labor costs will actually probably be boosted there too, but yeah, it's true relative to US labor costs, absolutely. I mean, you got to understand just what an amazing spot the US is in. I think a lot of people really forget that. I think a lot of investors forget that. The United States is very, very blessed to have neighbors that generally cooperate and get along with one another, right? We're sandwiched directly in between Canada and Mexico, and we've never had a military conflict with either of those countries. And we are very, very strong allies with both of them. And that helps more than you would think from a GDP growth standpoint. That helps more than you think. All the way downtown, you can see the spire of the World Trade Center. We were down in Lower Manhattan last night. We were checking out Ground Zero, and we even walked over to 200 West Street, which is the headquarters of Goldman Sachs. We were down there last night. Now maybe we'll probably be down there tomorrow night too. I want to walk across the Brooklyn Bridge because May 24th was actually the birthday of the Brooklyn Bridge. I'm not sure if many of you knew that, but it's true. The Brooklyn Bridge, I believe, is 140 years old. It was born on May 24th. So I think it's only appropriate that we take a walk across the Brooklyn Bridge. Hopefully it won't be raining tomorrow, we'll see. All right, you can see a little bit of the Empire State Building from here. Hey, ADI01 says, Tom, did you sign up for the Apple Savings account? Not yet, but I will. I think I may find time to do that tomorrow, actually. I think it'd be good to test it for like market research purposes. We'll go this way and go down. There's gonna be a huge traffic jam over there. Somebody says, what's the disc above your head? So this is just the design of the Bank of China. It's not really anything major. This is just the basic design of the building in itself. Yeah, somebody says we indeed had wars between US, Canada, and Mexico. I'm talking about recent modern times. Because if you think about the Eurozone, if you think about Eastern Europe, what's going on with conflicts there, conflicts between Russia and Ukraine, it's decimated those economies. We talked about enterprise software tonight and SaaS, software as a service. In this building, the New York Times building, sits Datadog, ticker symbol DDOG, which is a company in the observability market. They'll compete with the likes of PagerDuty, ticker symbol PD. This is Times Square. Well, I should say the southernmost side of Times Square. You see this? This is Joe's Pizza. I never understood why people would wait in line to eat at Joe's. I just don't get it. Now, is it like decent pizza? Yeah, it's all right. But it's not even worth a 10-minute line. But I think since it's just because it's near Times Square and it's so famous, a lot of people like to come to it. But look at that, guys. Look at the line. I think this is the longest line for Joe's I've ever seen in my life. It wraps all the way down Broadway and goes all the way around the block. For Joe's Pizza? Believe that? I can't even believe that. It's wild. Hey Sam, says I went to add the Joe's receipt to my souvenir mural collection. Very nice. Yeah, I don't know. I mean, for whatever reason, a lot of tourists like it. It's all right, I guess. It's all right. But that's probably a 2-hour line. I mean, you could just go to the Upper West Side, go to Made in New York Pizza, get a better slice, and not have to wait in the line at all. And also, for whatever reason, on Broadway, I've noticed there's a lot for whatever reason, I don't know why. Broadway leading up to Times Square, a lot of drugs, a lot of open drug trade, a lot of homeless too. And I don't know why they picked this area for that. And this is where the majority of tourists hang out. It's beyond me why they choose to hang out here, but anyway. All right, we're almost near 34th Street. Yeah, Kevin says, a good friend of mine says it was so-so. Yeah, I mean, it's good pizza, don't get me wrong, it's good. But I'm not gonna wait 2 hours. You could literally go to any shop in New York and get something better. Joel PM's his fan of Ben's Pizzeria by the Comedy Cellar. You know, I've never been. All right, let's cross this way. And we'll make another right here. Somebody says John's a Bleecker. Yeah, they're pretty good too. I think that's more deserving of a 2-hour line, if I had to pick which one. Yeah, TK Porsche, that's actually a good point. It's an unfortunate point, but it's true. You could actually hear the subway go by under us. You know what pizza place, speaking of pizza, I've never been to? I've never been here, Encore Pizza. I think this is actually, well, it's not new. This place has been here forever. But I don't think it's always been called this. I think it was called something else. I think my favorite spot of all time was DeFara in Brooklyn. Now, I think they closed down, but they opened up a location in Manhattan, I think. I haven't been to it, but somebody in the chat said they did. Now, that's deserving of a 2-hour line, in my view. Here's the Shake Shack. Shake Shack is packed. Ticker symbol SHAK. Shack. There's some more of the Fleet Week people. Someone says DeFara is the best original Joe's Pizza in the Village. Wouldn't wait 2 hours in Midtown. Yeah, I don't think I agree with you. DeFara's is the best, but I don't think I'd wait 2 hours for either of them. Or the Joe's in Midtown or in the Village. I think maybe just because, people who are visiting the city, they Google, what's like the best pizza. And for whatever reason, Joe's always pops up. I could definitely tell there's a lot more tourists in the city today. The MTA actually had to adjust the schedules of the trains. There's more people actually use the trains Friday through Sunday than they do during the workday, which is crazy, but it's true now. Here we have the Empire State Building. Right here at Herald Square. I may have to cut the stream short tonight. I'm getting a barrage of emails. I need to attend to this. Yeah, guys, we will see you tomorrow. I got an emergency I gotta take care of here. Nothing major, but just work related. But we will be back tomorrow at 8:30 from Lower Manhattan. Maybe we'll actually start the live stream from Dumbo, Brooklyn tomorrow. So if you guys enjoyed the live stream, feel free to leave a like on the video. Click the subscribe button if you're new. We will be back tomorrow at 8:30 p.m. I want to wish everybody a very, very happy Memorial Day weekend. Big thank you to all of our service members, and I think it's appropriate that we really remember, all of those men and women who lost their lives in the line of duty protecting the U.S. Because without them, there'd be no live stream, there'd be no New York City, there'd be no prosperity. So I think it's important to keep them in mind as we go through the weekend. So fun feeds, Joseph Hardaway, appreciate everybody. If you want to follow us on Twitter, you can check us out at Walks Wall Street. Abby1, Austin City Limits, Lemonade, Vicky MI, thank you so much. British Gray. And remember, there's always a bull market somewhere. You just need to know where to look. Have a great weekend, everybody, and we will see you tomorrow starting at 8:30. Take care.